What is poppin'? It is the Slapped, and I'm but a lowly Slapped, riding these DeFi waves, these ReFi waves, and of course with me is my Estonian madman, my man with a plan, my man without a tan, Rez. Every time I'm gonna clap for you.
Hello, it's me.
And this is This Week in ReFi, where we give you all of the ReFi news that is fit to be heard. And before we get into ReFi news, there was a story. Maybe you heard the story, Rez? It's called...
What story?
I don't know. What's happened in crypto this last week, dude? Anything of note?
Yeah, I think there's something. Something has happened. Something very interesting.
Have you heard of this thing called Terra?
Mm-hmm.
What is it?
So, Terra is a larger ecosystem where they happen to have this stablecoin called UST or Terra UST. So, why Terra UST is interesting is because it is not a collateralized stablecoin. It is an algo stablecoin. So, do you know the difference between these two things?
As a matter of fact, Rez, I made an entire video on Terra, which I'll leave above my finger. But
Nice.
I had amnesia last night, so could you explain it to me?
So if we have something like DAI, for example, DAI has collateral, meaning if the price of DAI goes down by for any reason, there would be collateral that would be sold off to maintain the peg to $1. If we're talking about USDC, one of the most widely used stablecoins, then there's a literal bank account somewhere with all of these dollars. You can bring your USDC to these guys, they'll give you dollars in return. So it has a very clear value of $1. Now, if we're talking about algo stables, it's complicated. So for Terra USD, we have a second coin called Luna, which you can maybe pull the price chart up for as well, because I think that's also very interesting. Yes, so Luna went from around like $30 to some very, 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 very small fraction of a cent in a very short period of time. And this is what has been popping off in crypto Twitter, and I think like in the DeFi, ReFi, everything Fi community very recently. So in order to understand how UST works, I figured I would make like a very simple illustration. So let's say we have UST, which is a stable coin. So we have this line over here, and we're going to say that there's only water up to this line. So if we have a lot of demand for UST, obviously the price is going to go up, right? So we add a bit of demand into the equation. So we can see that we're now over this line. Now, that's also not stable, right? That's not a stable coin anymore. We're now at like, I don't know, like $1.50 or something. Can't work. So how algo stables solve this in Luna's example is that they have a second token called Luna, which is the Ethereum equivalent in their own layer 1. And what happens is that at any point in time, you can burn 1 UST to mint $1 worth of Luna. And at any point in time, you can buy UST by burning $1 worth of Luna. So there's like this peg, they're connected structures. But what this functionally means is if we go over price here, the demand is going to trickle all the way into the Luna bottle. So now we got back to the peg, but there's just more valuable Luna, which is great, like everything's fine. The problem was this heavily depegged, so water started leaking out of it like a sieve. And the problem is that because people also know to expect that when the price of UST depegs and goes negative, there's this expectation that there's going to be a lot of people turning it into Luna and selling it off for a profit. But if you already have this expectation, you are going to be the first person trying to run out of the door with your Luna, obviously. Like, the price is just based on the structure of how these things are built, it's going to collapse. So this created an even stronger cycle of people running out the door. And here's like an interesting detail of how UST works. So I described this structure that you can always trade $1 worth of Luna for $1 worth of UST, right?
I think that the thing that the clearest way actually is that one UST, whether it's worth $1 or not, can be traded for $1 worth of Luna. That's kind of the way to think about it. So it doesn't matter the price of UST; it's agnostic.
Yes.
One UST is always worth 1 Luna. So if it's below the peg, if it's 90 cents, you trade it for $1. And the inverse is true. So if it's $1.10, you trade $1 of Luna for it. So it's UST. Think of it as price agnostic. As long as we have one of it, it's worth $1 of Luna, and that's how the ARB works. Yeah.
But here's the problem. So the way the structures are set up is that if there's a lot of this kind of activity happening of minting and burning and minting and burning, they start increasing the spread on this term. So what this means is now when you're burning $1 worth of UST, you're not getting $1 worth of Luna. Like the mechanism isn't giving you the value of $1 anymore. It's giving you less. So what it was giving was about, at some point, was even 60 cents of value. So there wasn't even a clear mechanism to bring it back up to $1 with the algo stable working as intended, because there was just too much going through the system, and their own system was rate limiting this arbitrage.
Yeah, it's a whole. I mean, the whole thing's a mess. I mean, you described it very well with the analogy. I think it's good to visualize it with water and see it as these demand vessels that fill up and hopefully overflow into each other. But I mean, your point is valid. Is that there was these unusual market conditions. There was massive fear. If someone says there was intact, whatever the thing is, things happen in markets. And there was essentially a hole in one of the bottles. And there was nothing to plug the hole. If it was a fiat backing, if it was collateral backing, you could have had that plugging the hole.
They did have a bit of Bitcoin.
They did.
But it just wasn't enough.
It wasn't enough.
In this situation, it basically didn't amount to much.
No.
There was just so much fear at that point. There was so much volume running out of the door that it's very difficult to stop. And the worst part is... what happens if Luna becomes extremely cheap? It's going to go into a hyperinflationary spiral, but because everything that it takes to bring UST up to the peg again is basically debt, and this is debt that comes at the expense of Luna's value. There's going to be more Luna printed to pay off this debt. Mm-hmm. So it's like investing in Zimbabwe dollars in 2006. There's just going to be more dollars printed to pay off the loans. If you're the person holding a Zimbabwe dollar, you aren't necessarily very happy.
I saw that the supply of Luna was up, this is a couple days yesterday, like 325% from like a day prior, something like that, to your point.
Oh, I have a chart of this
screen.
Do you see this?
Oh, we see it.
Yeah. Okay, so here's like a 3-month chart, and the white line you're seeing, this is the price. This is what's been happening with the price. But there's a second line which you can barely even see, which is the supply. Mm-hmm. So the supply over here, you can see, is the thing hugging the bottom of the chart. Mm-hmm. So we have like 300 million, something like this, in circulation, and then we hit the hyperinflationary spiral, and the current supply is 170 billion, up from 350 million.
Are you suggesting that supply is inversely correlated to price?
It seems so. Yeah. But yeah, a very tough time for, I think, a lot of people. What worries me about all of this was mainly that the savings account narrative for UST. I'm very worried about what kind of people this attracted, and they just lost all their money.
Yeah, it's a sad story. I think it's a cautionary tale, and I think it's something that we can learn from ultimately. And the video that I made, and I'll rehash it really quick, is DeFi needs to learn that what applies to TradFi worlds in terms of value creation doesn't go away now that we have decentralized ledger technology. Like, just because you have a new tool doesn't mean that how you create value is going to be fundamentally different. So their idea of creating value was essentially Ponzi-nomics. It was more people coming into the space looking to get high rewards, which drove more people into the space and propped it up. And then when we had that bubble burst, there was nothing there. There was no value. And it's just this recursive nature, this trying to hack value creation. I'm fundamentally opposed to it. I think it gives DeFi a bad name. And I think we're going to have to reckon, the space is going to have to reckon with the fact that, things that look too good to be true, these 20% APYs on stables and this infinite money loop, like this concept of an infinite money hack because we have DLT. It's like, no, dude. Like, there isn't an infinite money hack. You still need to bring in value somehow. Revenue streams, something, It's just absurd.
To be fair,
yeah.
I think for a very long time there was this narrative that the Luna ecosystem was getting a lot of adoption. And now because the Luna token has value outside of, being the mechanism through which we mint and burn stables, it worked as the Ethereum equivalent for paying gas fees and stuff like this in their layer 1, as I've understood this.
Yeah. But there wasn't any organic demand beyond a couple protocols, and specifically it was Anchor, and Anchor was the lending protocol of UST. Like, Ethereum could get away with it because the organic demand for Ethereum is massive. But this was a recursive demand where Luna was popular because people were lending UST, and UST was popular because it was backed by Luna. So as soon as one of them fell, the other one just went right with it. And it's a very simple concept of the reason why they both went up is because they were tied to each other. So as one went up, the other went up. But the inverse is true. There was nothing holding these two things. Once one dropped, the other dropped, and the other one dropped even further. Dude, It's a Ponzi. Let's just be real about this. It was a Ponzi, and I hate to say that. Like, it's crude to say that people lost a lot of their money, but you invested in a Ponzi and you got wrecked. Don't do it again. And next time you see something with 20% APY on a stablecoin, ask yourself, how is this sustainable? And it turns out that Anchor, the protocol that was lending, was bleeding money, hundreds of billions of dollars in capital with their business model, which was give people more money than they had.
Yeah. So, the short-term goal of attracting a lot of people put them into a really nasty bubble where the moment you reduce the APY on Anchor, I think that would have generated a lot of this flight out the door as well. But I think what came very unexpectedly was just the fact that because of how the stablecoin worked, someone was able to essentially game the system and collapse it very easily. It just required a lot of money. It was essentially like a Soros attack,
Yeah. All right, so that's crypto. So that's the backdrop of which we're playing against. But ReFi never sleeps and crypto never sleeps. Things will go on. We will recover. We will rebuild. So let's get into some of the ReFi stories. And there's an exciting one here, Sir Rez. And you might have something to do with this. So Toucan has raised the standards on their on-chain carbon token of BCT. And why don't, you actually wrote the proposal, if I'm correct, right? For this, or were involved in it?
I helped in places.
Okay, so you are very qualified to speak on this. What can you tell us about this this development?
Okay, so let's go back to the basics of voluntary carbon credits. So let's say you're a carbon project and you're doing some very climate positive things in 2012, and you get issued credits for it later, or you get issuance rights for these credits later, right? So you had this climate positive action. There was some moment in the future where Vera essentially let you know that, hey, now we can issue you credits for this period if you pay the fee. And the event of something happening, this climate positive thing happening, that's referred to as the vintage. And then the event of you actually getting handed this brand new carbon credit is the issuance date. So the proposal over here amounts to the fact that we saw that in the normal markets, people don't generally retire credits with a vintage to issuance difference in years, significantly over 8 years, while in Toucan's case, looking at all of the credits that have been tokenized so far, it was more like 12. So this means there's like a difference in how carbon credits are consumed off-chain versus what kind of carbon credits end up on-chain.
Right. So I think, and this is my assumption of this, and I know this is a gross oversimplification, but technically what's happening is the off-chain markets, usually through cooperation or guidance of some governing body, have determined that there are older vintages that just aren't up to snuff anymore, and they are de facto blacklisted, right? So a project issued in a 2008 vintage that's trying to get a credit approved in 2022, it could do it, but then there's no demand for it because it would not be up to standard, and the companies that would be buying these voluntary offsets would essentially be shamed for using them. Right.
Yeah, there's a huge social aspect to the voluntary carbon market of what you use, matters. It says a bit about, what is your commitment here. So on the other drastic end, I guess we have organizations that purely back like direct air capture at, huge prices.
Right. So we weren't seeing that on-chain as much. We were seeing much bigger lags between the vintage and then the issuance of credits, right?
Yeah. So the general point of this was just to cut out the market that is made up of extremely old credits that are only issuing because Toucan and BCT exist. It was mainly to cut out those. Obviously, this requires more changes in the future to up the quality more. But I will emphasize the fact that this isn't a pool level change. This is a bridge level change. So you can no longer even bring credits into the ecosystem that have a vintage issuance delta of 10 years or more.
That's awesome, man. I didn't even know that. I didn't know it was a bridge level change. I didn't read the proposal clear. I think it's even better because, then...
So it's kind of like communicating that Toucan just doesn't even want to touch these kind of credits anymore.
Good.
Like, we can skip all this. Next, please. And obviously, I think this requires follow-ups to BCT as well, in terms of forward guidance of raising the vintage, looking at project start year, stuff like this. But this is a very short-term fix that is going to make it so there's none of this 2011 Chinese hydro coming into the system over and over again right now.
And so that should improve the quality of BCT. So if a protocol or a person is holding BCT and the older vintages get burned off and higher quality gets onboarded, that should increase the value of the underlying token, which is a good thing financially. So good. I'm glad that we have you here to explain these things. Very insightful. And so we had mentioned one of the governing bodies, so IETA, which we mentioned last week in This Week in ReFi, has onboarded or accepted another protocol, another Web3 protocol or crypto protocol, right? FlowCarbon. So last week it was it Toucan? Last week, right? You're muted. You need to unmute.
Yeah, we reported on it last week, but I think it happened the week before that.
Yeah, it was Toucan. So then this is FlowCarbon. So just showing you the increase of, I guess you could say, influence, right? That is happening in the carbon space. So that's another thing that I will leave a link to. And along the lines of crypto projects, Luis Adame, the legend that he is, he's the lead of Moss, put out this tweet, probably related to the Luna thing, right? That whole situation, saying that there was just prices falling off a cliff in crypto and just in general. And so he's actually said that Moss is going to do a repurchase program of up to 10,000 MCO2 daily. And as we saw with your beautiful volume chart, as supply increases, price decreases, and the inverse should be true. As supply decreases, price should increase. The delta on-chain and off-chain tokens, let's say MCO2 versus like a pool of correlating nature tokens, there is a big discrepancy. Have you noticed that?
What do you mean specifically?
So I think MCO2 was trading at like $6, and like the equivalent off-chain version was somewhere closer to 9. So there's quite a discount on on-chain carbon credits, which this is trying to address, I believe, which I do think is showing you, and this is one of the things that we need to figure out, the space needs to figure out, is how do we get organic adoption of these credits and getting companies to accept. Basically, how do we drive demand to something like MCO2, BCT, so that the price of these credits on chain, it reflects the price off chain, or maybe even higher, right? That would be the dream.
Yeah, so this requires either two-way arbitrage, so you can move them between the worlds, or it requires a lot of like cultural buy-in for on-chain retirement becoming more and more of a thing, which I think is going to happen over time. But in the short term, I think there's this additional layer of a concept that you have to accept, which is on-chain retirement.
Right. And so maybe if we build out more marketplaces, segue, we can drive this adoption. And so what I'm referring to is Changeblock. Changeblock is having their first Ask Me Anything today, Friday, at the time of shooting this video. It's going to happen a little bit later. I think I won't be able to tune in, but I'll leave a link to their Discord. You and I were discussing Changeblock. They are a marketplace. We don't know too much about them. They want to be a carbon marketplace. We will learn about them as time goes on. I'm excited that another player is entering the field. And we had mentioned that what would be the best case scenario for a on-chain marketplace, in your opinion? What would that look like?
Well, it's two things. So I think what we really have a lot of right now is liquidity, which is super cool. So what you can build on top of BCT, NCT, and all of these like pool style tokens where you can pull specific credits out is to unify that all into a single marketplace of, hey, you can now come in here and pick and choose and we'll price it for you.
Okay.
So having immediate access to a bunch of these credits, since there's basically, because the commodity pool exists and because you can, pull stuff out, there is what amounts to a permanent sell order on like everything in there. So you can buy with no significant issues. You can just pull out the kind of credits you would want.
Cool. So
for a fee.
We will definitely keep an eye on this and let people know what's up as this project progresses. Always good to see another entrant into the field. So that's pretty much it with the crypto news. There's a couple TradFi stories that we think are worth sharing. And I thought this was very interesting. I thought this was clickbait, man, when I read the title. Germany plans to phase out the sale of combustion engine vehicles to help meet its ambitious goal. But that's exactly what's happening. Is Germany passed legislation that basically phases, I think it was by 2035 or something like that. You can't buy a combustion engine. That's not too far off, man.
Germany is clickbaiting us. I don't know what to say. Like, they're really, really good at getting attention now.
They are, man. But this is, I think, massive. I have mixed feelings on electric cars. I know that there is a argument for and against. The argument against that you don't hear as much. I think the argument for is more obvious. Is just the enormous amount of materials required to create these things. Yeah. It's like magnitude.
That's part of it. But the second part of it is just where is your electricity coming from?
Exactly.
So Germany, I think, is in a better position than in Estonia. In Estonia, a lot of our energy comes from shale oil, which is, not good. So like driving an electric car in Estonia, I don't think does a lot, mainly because, if the energy you're using isn't cleaner than the combustion engine you would have in your car, it doesn't necessarily do that much in terms of reducing emissions.
Yeah, it's a good point.
But as energy becomes cleaner, as we integrate more renewable energy sources, we will get to this situation where hopefully everywhere electric car is better than a combustion engine car.
Yeah, I think these are the sorts of things that it's a more nuanced view of these spaces, right? It's like electric car good. It's like maybe. It's like if the energy that's powering the electric car is clean, yeah, they're great, and we find a way to reduce the impact of mining the materials, etc., and find a way to recycle the batteries. But why I think this is important, the story is important, is whether or not, it's always the narrative's more important sometimes than the actual truth. It's like this shows that the world has plans to move in the direction of environmentally sustainable practices, and finance will follow,
Hey guys, look, we're doing something.
Yes. Well,
something doing good. Let's do something. I like something.
That's better than saying we're going to keep burning oil for the next 100 years, right? Like it's a step in the right direction, and then we have to hold them accountable.
It's a lot better than what we reported on last week, which was the article about Texas limiting investments into that divest from oil, if I remember correctly.
You are the segue master, because that's the next thing, is this story saying Blackrock, which is a investment firm, right? I believe they're like they hold a lot of money, and they do. They're an ESG legend.
They're
an ESG legend. Yeah, they're known for investing in environmentally sustainable projects, right? And having a initiative to prop those up. But now they're saying they're going to vote against more climate resolutions. And what says you about this, Rez?
Well, going through this article, I could understand the tension that BlackRock is feeling, which is do good for the planet, make money. And when these things are in heavy conflict with each other, it seems like BlackRock, at least this year, would like to tend more towards making money.
Right. I think they had mentioned the Ukraine war and the changing economic situation. And that's, like, I'm not surprised, right? Because unfortunately, money is still top priority. And this article proves it. It's like,
that's how the wheels of capitalism turn. Sadly, that's where we are. And I guess they don't want to vote companies into a situation where they go bankrupt.
Right.
Which, from an investor perspective, seems like a reasonable thing. But, the title of this article still makes me sad.
Okay. Yes, this is a sad article. So let's get to happy articles. And this is going to be a spate of 4 different articles that's just showing the amount of investment that's pumping into the space. So UK pension funds are going to be backing green initiatives, which shows you that governments are getting on board the investment into green initiatives. And then I've got 3 articles that will account for nearly $2 billion worth of bonds and investment into green initiatives. One from Northfolk Southern, which is a company. Orange, another company. That's 500 million euros. That's even more than USD. And ADX, which is in the Middle East, securing $700 million worth of bonds. I think a lot of them going to solar in the area. So good news. We counter that bad news with good news. And again, what this shows is, this is the future of finance, or at least will be a part of the future of finance. And I think this bodes well, not just for TradFi green initiatives, but crypto green initiatives as well, because the two are tied as much as crypto hates to admit it.
but yeah, I'm happy to see a continued shoving of money into unfucking the planet. That makes me happy. So you have successfully made me unhappy and sad into a happy boy again. Thank you.
Manipulating your emotions.
You're really taking me on an emotional roller coaster right now. Yeah.
It's like we're in an abusive relationship right now, Rez. Right. So last bit of news. This is an article. I'll be honest with you. I don't know who Lombard Odier is, but it seems like to be a very cool publication talking about green finance. And they mentioned a professor who has an interesting way now of putting forth the costs and the cost and benefits of climate change. And so now it's no longer just carbon footprints, which is the basic, how much are you burning and how much do you have offset, but now it's turned to something called CVI. Let me see if I can find CVI real quick. And CVI stands for climate value impact. So how impacted will you be by the coming climate change? Are you in a position to benefit from it? Are you in a position to, basically struggle because of it? And I think this is interesting because this topic of green is so limited to carbon, and there's so much more. And I'm sure you have opinions on this, and you could elaborate. What would be other issues of climate change other than just how much carbon are you producing?
Well, as a company that does stuff, generally the environment you're in matters.
Mm-hmm.
So, if you're a farmer and droughts and floods become more regular, obviously, the CO2 thing, that's bad for your business as well. But there's a very direct situation you are going to be facing, which is your yields are going to go down. You're going to be able to produce less food over time, which is terrifying.
Right.
So there are a bunch of these secondary risks that come from CO2 being emitted into the atmosphere, and all other greenhouse gases, obviously.
Yeah.
And companies really need to take stock on what's going to happen with them. I mean, the writing is on the wall that something's going to happen. It's just a question of what kind of intensity are we facing now.
Right. And then where are the consequences coming from? Is it going to be the natural consequences of destroying the ecosystem and incurring these sorts of secondary effects, or are the consequences going to be from regulators, or is it going to be from consumers, right? So, As you say, the consequences will be there one way or the other. Hopefully we can give enough incentive and enough support so that we don't have the natural consequences, but and that's ultimately what this article ends. Another kind of happy note, and it's happy in the sense that the economy is shaping up more and more that if you are doing the right thing, you will be rewarded economically, and I do believe that is ultimately what's going to be the catalyst to enact change. As you had said previously, this is how capitalism works. So if we can drive money to people doing the right things, they'll do the right things. And if we can take money away from people who aren't doing the right things, they'll stop doing the right things, right? So we just need more educated consumers. We need better focus from regulators. And I think we're doing our part, Rez, by educating the consumers, at least in small part. I hope so. Maybe not. Maybe we are.
It's a bit. I don't know. You guys have the opportunity of just kind of vibing with us for an hour. The minimum of what we're doing is at least like creating good vibes for an hour.
I hope we are. Yeah.
It's a contribution into the universe.
Yeah, I just have fun doing this. I have fun meeting with you and discussing these things. I think this stuff is fascinating. Mm-hmm. Well, that was the week in ReFi. Any last words? Anything you want to get out into the universe? Yeah.
Shout out to the CO2 cult, whose news we didn't mention last week.
No.
Our friends over at CO2 cult won ReFi DAO's NFT competition.
That's
so
right.
Good for them. Like, go Orbs. Orbs are dope.
I will leave a link to ReFi DAO, which is an aggregator of all the ReFi projects that are happening under the guidance of John. JE, I'll just say JE. I'm actually doing some stuff with that group. And then also the CO2 cult, I'll leave a link to that. Tracer, Milk Money, a couple other people, some cats from Klima, or former cats, doing some cool NFT projects, green-related projects. The space is growing. We're expanding like a 1,000-headed hydra. You can't stop us, Rez. You can't stop us. Can you stop us?
Maybe.
All right, man. We'll catch you on the next one. Above all else, remember to ape responsibly. Peace, dudes.
Peace.
And dudettes. I get the last word. No, joking. Peace.